Vacation Home Guidance, Revenue Procedure 2008-16 creates Safe Harbor by Ken Cohen. Revenue Procedure 2008-16, the procedure, creates a safe harbor definition of investment property applicable to exchange transactions closing after May 10, 2008, that involve the transfer of property consisting of a dwelling unit, defined below, and/or the acquisition of a dwelling unit as replacement property. In short, the IRS will not challenge whether a residential property or vacation home property is held for productive use in a trade or business or for investment if certain specified ownership and use requirements are met. The Safe Harbor procedure provides useful guidance on the characterization of vacation property and may also be useful for planning purposes, such as the conversion of a principal residence into a qualifying relinquished property. Requirements of Revenue Procedure 2008-16. A dwelling unit is defined as any real property improved with a house, apartment, condominium, or similar improvement that provides basic living accommodations, including a sleeping space, bathroom, and cooking facilities, e.g. a residential property. The IRS will not challenge whether a dwelling unit qualifies as 1031 exchange property held for productive use in a trade or business or for investment if 1. Rent the property to another person or persons at a fair rental for 14 or more days, and 2. The taxpayer's personal use of the dwelling unit cannot exceed the greater of 14 days or 10% of the number of days during the 12-month period the dwelling unit is rented at a fair rental. Under the procedure, personal use of a dwelling unit occurs on any day in which the taxpayer is deemed to use the property for personal purposes under 280A D2, taking into account 280A D3, but not 280A D4. Thus, personal use includes 1. Use by the taxpayer or other person who has an interest in the property or by a family member. 2. Use by any individual who uses the property under an arrangement that provides the taxpayer with some use of the property. Or 3. Use by any other individual if rented for less than fair market value. A taxpayer can rent the property to a family member if the family member uses the property as a primary residence and the family member pays fair market rent. Whether a dwelling unit is rented at a fair rental is determined based on all the facts and circumstances that exist when the rental agreement is entered into. All rights and obligations of the parties to the rental agreement are taken into account. Safe harbor, but not a bright line test. The procedure provides a safe harbor for purposes of characterizing investment property for purposes of Internal Revenue Code 1031. Property that does not meet the terms of the safe harbor may nevertheless constitute qualifying relinquished or replacement property under current law. Of course, any exchange must meet all applicable legal requirements. Every taxpayer should consult with their legal and tax advisor before engaging in any 1031 exchange.